looking for is being able to buy or sell the red line to the blue line. If you see somebody somewhere doing exactly that, because the spread trade should have an extra surge in volume, otherwise it's not a spread trade. It's very much like the Grail trade or the DVO1s trade or pretty much any trade that we talk about. The reason you see trades evolving is because of value. Well, the value you're looking at is universal. I mean, what you're seeing is what should be seen by Goldman Sachs. Would you agree with that, Sarah? What you're seeing should be seen by Bank of America, Merrill Lynch. So if they're seeing it and they like it, they will do the trade, which is going to add volume into that bit of business, right? So if you don't see that increase in volume, they don't see what you're seeing. They'll see exactly the same price, they'll see exactly the same value lines, but they won't be seeing the opportunity that you're seeing, because otherwise they'd be trading it, right? If they're not trading it, they disagree with your take on value. Does that make sense, Scott? They disagree with your take on value. So when I see a trade setting up, for example, when the red line goes in the opposite direction, and I see that trade there, selling the red line, and this enormous volume comes in, does somebody somewhere agree with your assessment of value, yes or no? Now, obviously, the volume is coming in because it's the cash market open, and that's a tough gig to be on, right? But you don't have to buy it on the way down. Like we didn't buy it on the way down. You can buy it on the way back up again. You can buy it on the way back up. So you can see that there was some value building in here. Again, the big surge in volume when the red line goes in the opposite direction to the blue line. Does everybody see that trade there? You see it? It's not hidden from you. And because there's a big increase in volume at that price, you're saying to yourself, there's a buy trade. And you're saying to yourself, there's a buy trade. Those two trades are identical in terms of value, aren't they? The shape of value, not the value of value, but the shape of value. Those two trades are identical. Yes or no? So if we now believe that those two trades are identical, and I'm assuming everybody's going to say yes because they are, so that's pretty straightforward. I wish somebody maybe sometimes acknowledges that they are, but there we go. Then we can obviously look at this and we can say, well, there's my buy trade on oil there, and there's my buy trade on oil there. Now, if you don't like buying on dips, you can always buy on the way back up again. And obviously that buy trade made money, and that buy trade made money, and we've made money on all of them. Not that difficult, guys. Not that difficult. It's several $1,000s through that phase. 44s up to 70s, giving you $300, and then 20s up to 70s, giving you $500. That's $800 a contract, $700 a contract, whatever. A couple of contracts in that, and you're making over $1,000 on that last little passage of play. This is a 1 minute chart. It's only taken 10 minutes to make over $1,000 based on the crack spread skew narratives that we developed earlier. The dollar's flat, so the dollar's not driving our stories. We're in good shape to buy these lower prices against the dollar narrative, so that's not a problem. The reg line in the background's been bullish all the way through this bottom edge, so that's in favor of the buy trades as well. So we've got no reason not to be in these, and I'm curious to know why nobody's in them. Curious to know why we're not getting as many people in these types of trades as we should be. They are very good trades. And because we're getting the ARB volume coming in as well, the size of that ARB volume, we're getting more and more confidence to do some business on these trade ideas. And the outcome? Well, obviously if we do take out the top bracket high here, we can now recognize that this is a very, very straightforward structure that should see us taking out a possible target today of $86 up to around about the 86.20 for a target price on that break higher through the capper price, which is now resting sweetly at $85.70. There's your cap sell. Kind of straightforward, isn't it? Kind of straightforward. Bid watch on oil just paid out. Big style, $500, guys.